It's official. Gold had a year to forget in 2021. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is in. Hi, Paul.
Hey, Michael. Good afternoon.
Editor Niels Christensen is out, and with us is Nolan Peterson, CEO of World Copper. Nolan, welcome to Kitco.
Thank you very much. Thanks for having me. Happy New Year, everybody. And good to see you again as well, Paul.
Likewise, Nolan.
It is great that we have you on, Nolan. We really should kick off the year talking about copper. And keeping with this seasonal theme, Nolan was a hop, skip, and a jump from Santa Claus when he was growing up. How'd you make your way from Nunavut to World Copper, Nolan?
That's a great story. I don't know where to start. So I did grow up in Nunavut, a little town called Cambridge Bay. I just like to tell everyone at the start, though, I'm not Inuit. A lot of people think I am because I grew up there. But just to get that out of the way early, because some people get very sensitive about that if they think I'm saying I'm Inuit or not. I grew up there. I was very immersed in mining from a young age, a lot of mines in the Arctic, resource exploration. So I was very sensitized to it. My father worked for the Inuit groups, negotiating agreements with the mining companies, for example, Tahara Resources, as well as Diavik and Ekati. So when I went to university in Vancouver at UBC, it was mostly because of the weather. And then I ended up going into the metallurgy program there and found that it opened up a lot of opportunities in mining. And of course, Vancouver, before I had gone to Vancouver, I didn't realize at the time, but I realized shortly thereafter that Vancouver was a hotbed for junior mining and mining in general and engineering. So I saw a lot of the benefits mining brought to local communities, such as the one where I grew up and in the region, and saw the potential for that. And that's kind of how it led me down the path of working for mining companies. I worked for many companies in Canada, New Gold, SNC-Lavalin, TMAC Resources most recently, and now I work for World Copper, developing some projects in Chile and Arizona. And I look to do the same thing, bring some benefits to the communities, as well as making money for the shareholders and stakeholders along the way.
Terrific. It's interesting you mentioned TMAC. I think it was about 2 years ago that TMAC was probably the headline of the start of the new year, if I seem to recall. So thank you very much. Look, we're briefly World Copper, what you're focused on, Nolan?
Yeah, so we are a junior exploration company based out of Vancouver. We have an asset in Chile called Escalones, as well as a project in Chile called Cristal. And we have the Zonia asset and project, which we're acquiring with a merger with Cardero Resources, which should close in the next week. That project is in Arizona. So right now we're focusing on advancing those projects, the development of them, exploration. We think they have a lot of potential, especially Escalones, which we maybe can talk about a little bit later. Won't want to get steal the thunder right now. But yeah, that's basically what we are. We have great prospects and we're just looking to develop them.
Terrific, Nolan. We really want to get into the discussion regarding copper, but I also want to get in. You've had a lot of experience in Eastern Canada, and I think that's been the story that really certainly dominated 2021. Turning to macro, there was a jobs report today. U.S. non-farm payrolls rose only 199,000 in December. That, according to the Bureau of Labor of Statistics, the monthly figure was well short of the consensus estimate of 400,000. The November data was revised up to 249,000 positions added. The key takeaway is lack of labor. Commenting on the report, CIBC said that there is little sign of recovery in labor supply. Gold spent the first week of the year above 1,800, but fell below 1,700s with the jobs report dropping. Now, Paul, in a note when we were talking about this podcast, first of our year, you said that it really was a year to forget for precious metals.
Yes, I mean, most people had that feeling, but Paradigm Capital came out with a report at the start of the year, which really put things into relief. The gold price fell 4.4% last year to $1,827 per ounce. It said that the senior gold stocks saw their share prices fall by an average of 11% last year. Intermediates fared even worse, with their share prices losing on average 16%. Juniors had the biggest turnaround, with their share prices down 20% last year, compared with a 123% average gain in 2020. Royalty and streaming companies were not immune to this. Their share prices on average lost 7%, and the main ETF funds also were down, losing on average 18% over the year. Silver producers fared no better, losing on average 30% of their share prices. Silver developers saw their share prices recede by an average of 44%, with silver explorers down 21%. Exploration success, however, continued to be rewarded with some very noticeable gains. Philo Mining up 562% and Arizona Metals up 541%, although a number of names, or most of the names, lost 30 to 50% of their share price last year. So a year for sucking lemons, I think.
I appreciate the perspective, because it seems like there was a lot of headlines that happened over the years. So kind of good headlines that would make you kind of think more bullish about the sector than actually how it actually was not that great.
I think annual numbers often hide a lot of detail, because obviously the gold price had a peak, I think, around mid-year, and a lot of people did well, and then it came off again. So quite a mixed bag throughout the year, a lot of volatility. But overall, that 1 year photograph doesn't look too pretty.
Uranium has been rocked by events in Kazakhstan. Gas price protests became violent and spread, bringing down the government. Russia-backed security forces are now in the city, and the Kazakhstan president has given police shoot to kill orders. Kazakhstan is the world's largest, or I should say the top producing company, responsible for 41% of the global supply of primary uranium. The company that is the state-owned company is the world's biggest uranium producer. It said on Thursday that it was operating normally with no impact on output or exports. Canadian uranium bellwether Cameco traded up sharply midweek, but has since fallen back. In other macro news, battery metals started the year strong. Prices of lithium carbonate in China jumped to a record $41,925 a ton in December, driven by strong demand from manufacturers of the batteries that are powering electric vehicles. Benchmark Mineral Intelligence said BMI's assessment puts the midpoint of Chinese lithium carbonate prices in December at $39,250 a ton, a gain of 485% from the same period a year ago. And that's according to Reuters. Paul.
This is going to be a very asinine comment, but lithium prices are sort of almost in some ways reflecting sort of Bitcoin prices going under a similar move. Main difference being there's actually something behind it, i.e. there's a raw material behind it, and there's actually demand for that raw material. Looking good for lithium going forward.
Following up on that, a little insight on the baseball on this as well too. You hear at Kitco, we track the interest in our stories, and we have a huge interest in what we publish around crypto. And you see so much of a retail interest that's following that, but there just doesn't seem to be that same interest in the battery metal space. There's certainly it's certainly a huge industry that we see, and then we see the investment in there, and then people are looking, or I should say, industry is looking forward on that. The other piece is that we did do a review of the battery material space. You're looking for a large come down, I would say, that people are forecasting for a lot of those metals. Paul.
I think that, again, illustrates the huge disconnect between the things we use in our daily lives and where those things come from.
Yeah. I think it was almost a decade ago when you saw this huge run up in the battery material space. And then you see, when you're looking at it, you could just see that it was too early. That they see that the demand, well, even then, that was really in a glimmer in people's eye at that time. It looks like it's real at this time, but we're still selling so much internal combustion engines right now. It does seem that the whole battery material space has kind of gotten over its skis. Paul, Philippines is more welcome to mining.
Yes, this past week or so, the end of last year in December, Ray Simatu, Secretary of the Department of Environmental and Natural Resources of the Philippines, signed an administrative law to lift a 4-year ban on open pit mining in order to revitalize the mining industry and usher in significant economic benefits, provide raw materials, and increase rural employment. Companies to do so must ensure that their open pit mining is undertaken to the world's best practices. I first saw that reported by Australia's RTG Mining, which has the Mabilo project there.
That's it for macro. In mining news, COVID disruptions seem to be coming back. Rambler Metals warns of challenges due to a substantial rise in COVID-19 in Newfoundland. Late last month, Agnico Eagle reduced activity levels at its Nunavut gold mines due to the COVID-19 emergency. Paul, what did you see in mining news?
Well, I've started the year pretty much focusing on copper, so very appropriate to have Nolan on the call today, also on the podcast today. A couple of things that really stuck out this week. Ero Copper updated their mineral reserve and resource estimate on their MCSA copper mining complex in Bahia in Brazil, as well as their NX gold mine in Mato Grosso. Their update features a 13% increase in reserves at MCSA to more than 607,000 tons of contained copper. That's hosted in 59 million tons, grading 1.02%. And at NX Gold Mine, their reserves increased 25% to over 306,000 ounces of contained gold. Ero Copper's been a very sought-after share price. It's been growing and growing and growing, and it looks on the geological evidence and the reserve evidence that that's not going to stop anytime soon. Also in South America, in Chile, Cochilco, which is the country's state copper commission, they forecast that water usage by copper miners will increase about 23% through 2032, as red metal output is forecast to grow more than 21% to more than 6.95 million tons per year. The agency estimates that some 68% of water will be seawater and 32% will be continental water. They also note that there's a migration in terms of production from away from cathodes, increasingly towards copper concentrates, and within that, increasingly towards copper concentrates produced from sulfide mineral. Why is all this important? Water is becoming an increasing issue for copper producers all over the world. Water is an issue, but particularly in Chile, where most of the copper is produced in regions of desertification.
I think that's a good place to bring back Nolan. Last year, Goldman Sachs made headlines with calling copper the new oil. It is projected that there's going to be a big datalyst in the space. So Nolan, when you're looking at the space, what is most exciting? Is it going to be the increased demand, or is it just going to be the shortfall with mines getting depleted?
I think it's really a combination of both, Michael, but starting with the supply side, it's becoming harder and harder to find very large deposits that are attractive economically, especially as the costs are rising rapidly. As Paul mentioned, water consumption, especially in areas like Chile and Arizona, is becoming an issue. That raises costs of production. Those desalination plants and seawater pipelines, they have to be borne by the consumer at some point. The grades are dropping. Copper is the third most commonly used industrial metal, but it's not as abundant as iron and aluminum in the Earth's crust. It's far more rare than many elements that we think, for example, like magnesium or calcium or others that are hardly used. So, we're using a lot of it. It's becoming harder and harder to find. On the demand side, every year it's steadily ramping up just through population growth and through westernization of economies and infrastructure. And then on top of that, you start adding the decarbonization effect and the transition to electrification. I think that it's a two-pronged perfect storm, so to speak, that will put the price pressure on copper substantially in the near future, similar to what Goldman Sachs has forecasted. Now, that I don't know if that necessarily translates to 2022 or even 2023, but midterm to long term, it'll definitely be sustained, in my opinion.
That goes to some of the studies. Copper has been red hot in 2021. However, there are some forecasts saying that copper is going to kind of come off the boil. Codelco surprisingly said that it sees a 9% price drop in copper, that according to Reuters. Paul, go ahead.
But I think we're getting into a situation again, like in the super cycle a decade or so ago, where any potential disruption to established copper supply could really, really spike prices. One of the news stories at the moment in Cerro Colorado in Chile, they're facing effectively they're being sort of shut down because they can't get access to water. They've been told to draw less water from a particular aquifer, and as a result of that, it looks like they're going to be having to shelve their expansion plans. They've started laying off workers. It's threatened the long-term viability of that particular operation. These kind of incidents will occur throughout the year. There'll be industrial action in some places. There'll be community resistance in other places, which stop mines producing copper. All of these things will keep the copper price bubbling along very healthily.
There was a terrific report a couple of years ago from McKinsey. They're just identifying regions that are going to be affected by climate change. And a lot of those mines in Chile were bright red, just having to deal with the water situation and just them being, again, just being in the desert, Paul.
Well, that's, one of the friends of the show, Mark Fellows at Scarn Associates, one of their products that's coming out soon is their copper water product. And it's really looking at that, the water vulnerability of mining operations around the world.
Nolan, just looping back again, when we're talking about mines becoming depleted, could you could you just expand on those points, just looking at what current copper supply is and where you kind of see it tailing off?
Yeah, we have an interesting chart and a number of stats in our corporate deck. I'll just try to remember them offhand. But over the last 30 years, the average head grade of copper mines worldwide has dropped from about 1.6% to below 1% now. And that's been a steady decline over the last 30 years. And I like to make the point in my presentations that effectively doesn't seem like a lot when you think about it, but you're basically almost moving twice as much material now, processing twice as much. Your equipment needs to be twice as large. Consumption of water, consumption of power, reagents, et cetera. Everything is effectively doubled by a halving of grade. That cost to make the same pound of copper, that cost is going to be translated into the price that the mines have to sell to be profitable at, and that puts a cost pressure on. We also have a stat that a substantial number of mines are going to be out of ore by 2035. Of course, that's with current reserves, but eventually every mine will run out of ore. Maybe a lot of the biggest ones have already had their biggest discoveries behind them. So it is becoming more challenging. You're seeing a lot of copper companies going for deeper exploration activities. The near surface deposits have been snapped up or claimed already by majors. So you have, one of our assets, Cristal in Chile, we believe is a potentially large scale copper porphyry, but because of its location is about 500 meters below post-volcanic cover that we would have to drill through. We expect to find pretty high grades there because nobody's done any drilling of that particular deposit, but those will become more of the reality going forward as we have to go further into the Earth's crust to find high enough grades to become economic.
I think the copper space is really exciting. Just looking at energy transition, just the amount of copper that you're going to need in electric vehicles, never mind for building out your windmills and building out your solar plants. Paul?
Mm-hmm. I think one of the interesting points you mentioned there, Nolan, declining grades. Grades declining, companies are going to have to look to produce copper from sort of lower grade deposits, and that will become possible as the copper price either stabilizes around $4 and goes up. Higher copper prices mean you can have a lower cutoff grade, and so what is considered waste tomorrow will be your what is considered waste today will be your tomorrow.
Interesting again. So it will be coming into the year. The International Copper Group makes the point that there's some significant mines that are coming online this year, or just recently have come online. So that will be adding to supply. Namely, that would be Kamoa-Kakula, the Ivanhoe mine that's in the Congo. Never mind, also there is the Zijin mine in Serbia, which is just a monster mine that is just started producing. Nolan, you did have a finance background. There's been a lot of interesting mines that are touting themselves, whether how well they're good on water, or especially how well they're doing on electricity, and just being able to produce, how would you say, carbon-free copper. How real is this to you? How much of a demand do you see from this, from people that are looking to get supplied with copper?
Yeah, I think this is a great question, Michael. It's very on trend with the way copper is. Copper is going to be viewed as part of the future economy, but it won't be enough to just say that you're making copper and you don't worry about how much pollution we're creating. People are going to be looking to lock up the entire supply chain from start to finish and greenify it. So to your last question, I was speaking with a trader from Antofagasta who deals with copper marketing, and he told me that many companies are actually paying a premium now for green sourced copper. They're starting to pay a premium, especially for cathode, which usually comes from oxide mines, copper oxide heap leach operations, which tend to be greener and cleaner just by their very nature, especially if they can source the power for the electrowinning from green sources of power like hydro or solar, like is very common in Chile. So yeah, I think it's definitely a reality for many operations. The sulfide operations that have very large scale mining deep into the earth, that then have to ship it on bulk shipping and then to a smelter, which usually hides the pollution. I don't know necessarily if they can achieve the same levels as these oxide heap leach operations, but there is a demand growing today. It is picking up steam from everything that I've seen, and that leads into one of our projects, Escalones, which is a copper. We switched it from a sulfide to a copper oxide project. We found it to be more economic, at least preliminarily. We're working on a PEA right now that will demonstrate that quite emphatically. But that's the angle that we are approaching that project from, and we want to benefit from the greenhouse gas reduction of a copper oxide mine.
Paul?
I think LME grade 1 cathode, grade A cathodes have often, or for many years, have received a premium, and being able to companies to show their low carbon credentials as well. I can well expect to see them get a bigger premium, and that may only be, and that's going to become, I think, rarer, because one of the other things the Kitco report said that I mentioned a moment ago is that in Chile, the amount of copper produced by hydrometallurgical processes, that's very much in decline. And so there's going to be fewer sort of copper cathodes coming out of the mine, so to speak, going forward into the late 2020s and 2030s.
Nolan?
Yeah, that's right, Paul. Going to what I was saying, a lot of these larger scale oxide deposits have already been snapped up because they're always near surface. They're easy to see. If they were economic decades ago, they were mined out. And that's really the situation. You're left with a smattering of smaller to medium-sized operations in Chile that they don't benefit from economies of scale like the larger operations. They don't have access to as much capital as some of the projects would attract with a global interest. So yeah, definitely those are on the decline, and it's unfortunate though, because that's where the cleaner copper will have to large portion of it will come from in the future.
Last point I want to make on copper on the macro front. We're going a month away from China's Olympics, and we're going to see China is just a huge consumer of copper, but we're also looking at how real they're actually going to be able to transition their economy. Certainly, you've seen capital projects have been coming asunder right now, and you've seen tightening of control as well as tightening on interest rates. You want to see more of an investment, I guess, into propping up the consumer and then transitioning their economy. There'll be all eyes on that nation in about a month, so we'll see where that gets us. Nolan, I want you to put on a different hat because you've had long experience in Eastern Canada and gold mining, and there was just a lot of action in that jurisdiction in 2021. I think of Agnico Kirkland, and I also think of Great Bear. But from your perspective, more of a removed perspective, what were the gold sector highlights for you in the past year?
Yeah, well, so personally for me, it would have to have been Agnico's acquisition of TMAC, because I started the year 2021 working for TMAC. We were at the time in the midst of the Shandong transaction, and then Agnico came in and purchased TMAC. I think it's a great pickup. I've always looked at the Meadowbank operation near Baker Lake. Agnico's investment in Northern Canada is very strong. I think they've done very well with their community relations and engagement. I know a lot of people were When I was with TMAC, they were saying, you should partner with Agnico. They're a great corporate citizen. Their successes in Quebec as well, and of course picking up Kirkland. I think it's a very strong sign from Agnico of investment in Canada in the gold space. We need more companies like that are flying the flag of Canadian mining, especially in gold, and investing in Canada as well. So that was the big takeaway for me. I know a lot of people in the town I grew up in, Cambridge Bay, is only 100 kilometers north of the Hope Bay operation. So it's very close and personal to me. So that's the big story for me.
That was a bit of a, how would you say, that was looping back to China, that was a bit of a political hot potato for China definitely at the time, and then Agnico came in. But that was an interesting transaction. But thanks for highlighting it, Nolan, because how would you say, it's a transaction that kind of dropped off the radar with all of the other activity in 2021. And the other thing that was interesting is just that Agnico Eagle was really the company that it seemed to be the most aggressive of the senior gold miners last year.
Definitely.
Let's tune to our number of the week. Nolan, we always start with a guest. What's your number?
My number is 58, and that is from a Financial Post article from Frank Mintz, I believe, who was talking about the strategic importance of lithium, as well as copper and other metals in Latin America. So 58 is the percent of the world's reserves held by Argentina, Bolivia, and Chile of lithium. And he made a strong case that the United States, in particular, has potentially left an opening in Latin America, similar to how they did in the Middle East for oil previously. Now they're letting a strategic opening for other strategic metals like copper, lithium, and others in that part of the world, letting players like China and potentially Russia capitalize on their, I guess, looking the other way or not paying enough attention. So I think that, as we mentioned earlier about lithium, we need to keep our eye on the ball. A lot of these metals, which we've taken for granted, such as copper, are going to become more and more strategic and of global interest going forward. I read another article that said that, for example, China has a lot of lithium themselves. They have a lot of other key elements, but what they don't have is copper. So they are going to be looking to lock up their copper supply going forward, especially since they're the world's largest consumer of it.
Certainly, you've seen that with the deals that China's made, again, with Kamal Kagalua, and then also the Zijin takeout of Serbia of Nevsun. Paul, what was your number?
I've got. I'm going to try and stick to the EV theme in a very roundabout way. The first number I picked was 90, and that struck me. Last year was the first time in 90 years that General Motors lost its title as America's top car seller, knocked off the top spot by Japan's Toyota, bringing in a sort of an EV element to this. Also, very recently, it was the start of the year, it came out that Ford is doubling the production of its electric F-150 Lightning pickup truck to about 150,000 units a year.
Look, Paul, somebody's got to have a gold number in the number of the week. Minus 13 years. The U.S. Mint sales of the American Eagle gold coin surged 48.4% year on year to 1.25 million ounces in 2021, marking the strongest demand since 2009. Physical demand for gold remains robust despite continuing ETF outflows, with the largest gold pack ETF, Spider Gold shares, losing 14.1 billion in assets. That from BMO and reporting from Kitco. That's it for us. Nolan, any major announcements in World Copper over the next 12 months?
Oh, yeah, we have a lot of exciting things coming up, Michael. So we have our Escalones project in Chile, which I mentioned. Last summer, we put out an updated resource statement that converted it from a sulfide project to an oxide project. As I mentioned earlier, to some of the advantages, oxide projects are less expensive to develop, lower operating costs, higher margin. They use 4 times less water, 40% less greenhouse gas, et cetera. So the next step after that resource statement is a preliminary economic assessment, will be the first PEA for this asset in its history. We will be publishing that within the next month or so. The results are looking very good, very exciting to get those numbers out so we can be benchmarked properly against our other peers, such as Marimaca, which is also in Chile and has a primary oxide project. But we have 3 times as much ore as them in the ground and 2.5 times as much total copper. So we're very excited to be in that league and in the discussion with a great company like Marimaca. That will be coming. We're also expecting to get permits for a drill program at Escalones, which we'll be looking to expand that resource in the coming months, expand the oxide potential there, which would only increase the economics even more. We're closing the transaction with Cardero Resources again within the next week. This has been a long-running process over the last couple quarters, since dating back to actually Q2 of 2021, so last year. So it's taken quite a while to get to where we are, but it will be closing very soon. That will bring the Zonia asset into the company, and we'll be looking to start exploration and drilling there, as well as a PEA update as we assess our plans going forward. And then that'll lead into the second half of the year, where we'll build off of what we've done in the first half. So yeah, it's an exciting time. Please take a look at us if you're interested. And of course, if you want, you can reach out to myself or anyone else at the company. We'd be happy to tell our story.
Well, reach out to us. You can follow me at Michael McCrae on Twitter. That's McCrae with 2 C's. Nolan, how can they get a hold of you?
Yeah, so the best way is to go through the company and corporate development and investor relations. So www.worldcopperlimited.com. You can also send me an email personally, npeterson@worldcopperlimited.com. And yeah, I'll do my best to get back to you if you have any questions or not.
Paul is at CGS 2021 Gold. Nolan, thank you very much for your time.
Thank you very much. It was a great time.
If you like what you hear, tell a friend, and don't forget to subscribe. On behalf of Nolan Peterson, Paul Harris, and Michael McCrae, thank you very much for your time, and have a great weekend.